feel like, do I see you running? Or I know I see John
Yeah,
Tapp
so
running.
I used to run around there. Jack and I both did a marathon last year, but I was training. Yeah,
Thank you.
I was training for the marathon, and you probably saw me running around there. I used
Viva Finance, guys. What's going on? Episode 7. This is Get Wrecked. I'm Marchant Young. We got Hodges and Jack Markwalter over here, and they started a company called Viva Finance, and we're here to learn about it. Guys, I can't thank you enough for having me over here and getting after it. I'm looking forward to it, guys. Obviously, we go back a little bit, back to high school, even NYO days when growing up. But what you guys are doing now is awesome, and I don't even want to try to elaborate on it because you guys would do so much of a better job. But if you could just introduce yourselves, what y'all are doing with Viva Finance and how everything's going.
Yeah, absolutely. So I am Hodges Markwalter, younger of the two. Marchant and I played on the basketball team way back in the day. I think I was 7 years old. You were 8. So
yeah,
where we could barely dribble, I think.
No, you were a beast. But
yeah,
continue.
And you got
Yeah, Jack Markwalter and Marchant and I were in the same class at Marist High School, and so awesome seeing what Marchant's doing now, and pleasure to be on the show.
The pleasure is mine. Boys, you got it going on. So tell me, what is Viva Finance?
Yeah, so Viva Finance, we are an online lender. We provide personal loans and financial education for working Americans.
Okay.
Our mission is to build an inclusive financial system by expanding access to affordable credit. And the mission sort of dates back to our time at Notre Dame, and more specifically Jack's time with some of the stuff that we got involved with while we were there.
Yeah, and so my freshman year at Notre Dame, I got involved with a group of students who we learned about payday lending in one of our classes. And we saw that these payday lenders would charge up to 391% interest annually in the state of Indiana, and wanted to do something about it. So we ended up starting a nonprofit to serve these borrowers and provide an alternative to payday loans in the South Bend, Indiana community.
Okay.
And that really served as the foundation for the mission for Viva. We're serving that same mission of expanding access to affordable credit, but doing it in a much more scalable way, something that you can really grow to be big and serve a lot of people.
Okay, and you said payday, so what are payday loans? Sorry.
Yeah.
What's a payday loan?
Yeah, so a payday loan is a loan with a very short term. So usually it's a typical small loan size. So think of like a $500 loan, you get into a bind, can't make your rent payment, and so need $500 quickly. You can go to what's called a payday lender. Okay. And basically it's a loan that will be 10 days, 14 days that you're supposed to pay back at your next payday.
Right.
And so that $500, you might have to pay back $550, but when you look at it over a 10-day period, that could be hundreds of % interest that you're being charged for those 10 days of that loan outstanding.
Okay, gotcha. And so you guys started as a nonprofit at Notre Dame, where this idea originally came from a nonprofit at Notre Dame that you guys were helping out students at Notre Dame.
Yeah, exactly. So that's where a lot of the inspiration came from.
Okay.
And, then really saw how big of an impact these types of loans could make in people's lives, but also saw how many people needed a product like this.
Sure.
And so after graduating from school, I spent a couple years working in investing, and Hodges worked in investment banking for a year. And this was kind of the inspiration for the problem that we wanted to solve, being that access to credit. The thesis that Hodges and I kind of had originally was that if you've got a good job, you should be able to get access to a good loan.
Okay.
And so thinking about somebody who has a good, stable job, like a teacher, a firefighter, a police officer, these are a lot of the borrowers that we have.
Okay, yeah, I was going to ask those are the type of people that come to you? Really?
Exactly. And so really, like if you've got damaged credit history, you made a mistake in the past, but you've got that stable job, we're able to work with those borrowers. And so that's kind of where the idea came from.
Yeah, and so the model, it's basically predicated on that. And so our loan approvals and eligibility is based on your employment rather than just your credit score. And the way that we are able to tie our performance to the likelihood of somebody keeping their job is that we'll service our loans directly through payroll and have the infrastructure to do so. So we're essentially tying our repayment to their job and to the individual still like receiving their check, basically.
So it's just money coming out of their check.
Essentially, yeah. So it's basically like splitting.
Yes.
Yeah, basically like splitting your take-home pay to have a portion of your paycheck go to the repayment of a loan.
Well, yeah, I mean, especially if in a situation like that where it's automatic and it's coming out, no matter what. I mean, that's obviously going to be a thing where you feel more comfortable that is going to get paid as long as they're sticking with their job. But it sounds like you guys are able to vet out whether or not people are their track record means they're going to stick with this job.
Yeah. And just like Jack mentioned, so we're starting off in these earlier innings with Viva by targeting employees in industries with low turnover. So K through 12 education, state and local government, hospital system employees as well, all of which have those industries have a profile that's high density of employment, a lot of people in one region or certain area, and then also very steady income and steady jobs. Like there's lower turnover in those industries as well. And so especially when getting started, we're at the peak of a long bull market, and we wanted to make sure to target industries that were more resistant to changes in the overall macroeconomic activity. And so those industries are relatively steady and have lower turnover compared to like retail or logistics or anything along those lines.
Gotcha. Okay. And so as far as what do you think is, obviously there's plenty of different reasons why somebody would come to you for a loan like this. But what do you think are most people, or why would somebody come to you for a loan?
Yeah, I'd really put it into two buckets. And so the first is to get access to cheaper rates. And so somebody might have damaged their credit score by getting into a ton of credit card debt, for example. So someone might owe $10,000 in credit card debt. They might be paying around 30% interest on that credit card debt. And it's daunting. They don't really know how they can get out of it, and they might come to us to try to consolidate that debt for them, save a lot of money in interest, and pay it down. And so that's actually our most common use case right now is refinancing other debt, and so people getting cheaper capital there. Then the other one is more need-based, so one-time expenses. And so we'll see everything from like health expenses, that's been especially common during COVID. If somebody's car breaks down and they need to repair their car, that's an expense that a lot of times people can't cover with their savings. And so everything from that to home improvement expenses, just kind of one-time bigger expenses that might not fit in somebody's budget.
And I guess the way I kind of looking at it from outside in, and you think about it and you have, you don't want to put somebody into more debt or into a worse situation or anything like that. And obviously that's not what you guys are trying to do. I'm just kind of coming at this at a step at a time. So, but I think what you guys do offer, though, like you said, is you reduce that interest rate, or you're able to refinance and give them better terms on whatever money that they owe, and kind of provide them an opportunity to be able to take smaller steps where it's not hurting them. Because I mean, like you said, if somebody gets in a car crash, they just don't have the money. If you don't have the money, you don't have the money. Like you got to figure something out. You got to use your car to get to work to continue to make money. And you guys, might be able to provide an opportunity to where they're able to do that.
Yeah, and clearly there's a need out there. There's trillions of dollars originated a year in personal loans that combined with credit card debt. But what we're really able to provide is that the weighted average FICO score of our borrowers is sub 600. And if you have below a 600 FICO score, it's extremely challenging to access any sort of credit, especially when you're in those events where you need the money right away. Oftentimes you can be marginalized and have to go to an online lender that charges north of 100% interest, or go to a payday storefront where you'll be charged in the hundreds of percentages in terms of APR as well. So we're able to provide an alternative that's far more affordable, especially considering the typical profile. If you look on standard metrics like FICO, and able to provide something that it's a lot cheaper and a lot more affordable. Then also we report on-time payments as well and allow for individuals to build their credit score over time and to
by paying off your
by paying off and then making steps towards financial freedom. And so just as an example, with like a $500 loan, we have a loan product that is 0% interest, just a $25 fee paid back over 5 months. When comparing that to like a payday loan, as an example of what Jack saw in Notre Dame in South Bend, it's apples to oranges. It's not even close what borrowers would pay in those two circumstances.
That's kind of amazing. It almost sounds, it's like moral lending. I just look at it, I think about it, it's like, you guys are good people and you want to help people, right? So, but obviously you've got to run a business. So there's two sides to it, but you have situations where you're able to use your capital, and I'm going to get to this in a sec, but you're able to use the capital that you guys have to be able to help out these people in those situations where you can offer products like that. And from what I read is you guys just had Series A that you just got done, the funding for that, and raised over $6 million, which is really awesome. So, talk a little bit about that and where you guys are going to take it.
Yeah. So, thanks for that. And we closed on that round in August, $6.2 million, and a lot of that capital is really going towards taking the business nationwide.
Okay.
So, to put it in perspective, we started lending in January of 2020. In the year 2020, 99% of our loans were done in the state of Georgia. And in 2021, we had just started expanding throughout the Southeast. And so raised that round of capital really to start pushing the business nationwide. And now we're in 15 states and hoping that we can lend in all 50 by the end of the year.
By the end of this year?
By the end of this year.
That's
so we
intense.
might not have a loan in all 50 states, but at least have the capability is what we're going for.
Okay. And I'm sure there's a process to that, licensing, everything you have to do.
Yeah.
Wow, that's intense. So all 50 states, and that's you guys basically got going the year before COVID, and much of your growth has come through COVID. And we're here this is downtown Atlanta, and you guys have an office and 16 employees or 17,
17
going. So it's fast paced. I feel like at this point where you guys are kind of. All this is coming in is like, how are you guys handling that? It's like no personal life, no.
Yeah, it's fun. If you get into the office at 7 a.m., there are a couple people that are in before you typically. It's extremely fast paced. Everybody's working towards common goals, and it's a ton of fun. It's been a blast. I feel like every day is different, and it requires a lot out of us. It's definitely been a full-time job and then some as well. But it's long days, but it's rewarding. We're doing what we love, and really, it's fun to kind of work towards something. Work with your brother and Philip also, who's working with us as well. So it's been a blast.
Yeah, and it's really crazy just to see how much progress you make in a relatively short period of time. Like
Absolutely,
you look back 6 months now for us. Back in August, we had 9 employees, and we've doubled revenue since then. Just about doubled our number of employees as well. And so it's been really. It's night and day, but like Hodges said, you don't really notice it in the day by day.
Sure.
But every time you kind of put your head up and look back, you're like, wow, I can't believe this is what we've done in the last few months.
Well, from the outside looking in, trust me, it's noticed. Like, because you just see it on that level, right?
Yeah, there are a lot of things though I'd say that don't go quite from the outside in, and granted, I'm not sure what exactly is always seen like as a startup and the cool office space, whatever else, but there are aspects to it that aren't the most fun and aren't easy. Like we've just as an example, when we were really trying to ramp up at the end of last year, we were looking for new avenues for growth and ways to really continue to scale and to grow, and we sort of turned it like our efforts to some tactics that are just kind of old school, like literally showing up to schools, handing out donuts and flyers, and with 3 of us, set a goal to go to 100 schools in a month, to just increase awareness, get the word out
100%.
about our company, set up staff appreciation events, and next month 150, 250 the next month. So it's a lot of grind work, a lot of work that not necessarily
sweat equity right there.
Sweat equity,
100%.
The only answer I'd say for how do you really scale or how do you find efficiencies, it's just work harder at this point. But obviously we are finding ways to make
absolutely.
1 + 1 = 3 instead of 2, but a lot of times you have to really kind of work through it and just make sure to do whatever it takes in those circumstances to continue to grow the business.
Right. Well, and do you think people say you're a kindergarten teacher or a 3rd grade teacher, or you're a firefighter. Do you think that they know about these types of loans, or do you think that these are out there? Or is, when you say the awareness side of things, I personally was not aware that about all this until I started talking to you guys and looking up the company and everything. Like, I was unaware that this was available and kind of how this all works. So you think that just plays obviously a huge part because people maybe aren't necessarily just going out and looking for these types of things.
I'll just say something real quickly. Like, so our product, just to give like full, clear understanding. So it's personal loans, and we have two products. One is up to $500, another $10,000. Most, like the average loan size is anywhere between like $3,000 and $5,000. And so personal loans in general, the way that we're doing it and our distribution is a lot different, but the market is out there, and there are a lot of people who need access to unsecured personal loans, I'd say.
And also, I'd mention, like, a lot of our borrowers, I'd say, are pretty self-aware, knowing that they're not in the best credit situation.
Right.
And so a lot of people are dissuaded from going to traditional financial institutions like their credit union or a community bank. And so when people hear about our product, understand that really the approvals are not based on credit history, but rather their employment. A lot of people see that as a great opportunity to try and see if one of our loans can help them out in their financial situation. And so a lot of for us, the kind of difficult thing is how do we get that awareness out to our customers, especially with our customers being so specific.
Right.
But once people hear about our product, we typically see pretty high take-up rates and a lot of people at least exploring it.
Right. Well, I think the end goal, right, I mean, is to be able to relieve, these people or help these people from some type of financial pressure. And obviously crazy times right now, whether it's the war, the financial markets, oil, gas prices, everything like that. I feel like this is a time where you guys kind of almost come in handy, where it's like, I don't know. I mean, does that peak up business where it's like, where everything is kind of going haywire and chaos is all running around? Are you guys getting more calls, or is that something where you're able to kind of step in and help out?
Yeah, and so for us, at least from a Viva standpoint, we really want to be the go-to financial services provider for the overlooked consumer.
Okay.
And so people who may not be fully served by financial institutions currently because of damaged credit history or whatever else. And so right now, starting off with the lending product, we felt like that was a huge need and a good way to kind of get to the market, build up our customer base. But over time, want to provide a variety of different products that serve really all of our customers' financial needs, really building around our customer base. And so over time, that could be credit building savings accounts, access to debit cards really built for a spending account, built for a budgeting account. And so I think it's a great opportunity for us to really try to make an impact in that way, just because we think really starting with lending, that's one area where people are severely underserved, but then trying to hit all of these different areas over time using some of our core competencies that we've built through our technology so far.
Well, yeah, that's awesome. That's some legit stuff. And I feel like, talk a little bit to me about the culture of the people that you're working with and how that can kind of help expand that and, drive that growth.
People that come from like all different walks of life, and it's fun because, and it's also like relatively young team, I'd say. So there's a lot of, new idea generation and new perspective when we bring things to the table, where it's not just industry experts who've been around it for 30 plus years and this is the way things are done. So we're definitely, looking at things with a new lens and aren't afraid of trying new things, whether it be in sales and distribution or in account servicing and managing a good customer experience.
And I think a lot of people really were motivated to come work for Viva because of the mission as well, and that really resonates. We have a very humble team, and people are willing to do whatever for our customers, even if it's not the most efficient or not the most scalable at this time. We'll try to help people with whatever kind of situation they're in. And that kind of resonates through the team, and I think it really starts with everybody having those same values kind of coming into it. So that's been a big part for us.
Well, and Viva, so life, right? Who came up with that name? Who got the credit for Viva? Was that you?
Yeah. I think it was Jack. I was bouncing some other ideas that never really stuck, and then Viva came along, and it definitely it rings pretty well. And I think for the most part, everybody seems to really like the name.
Well, I started off this podcast with a horrible way to bounce the Viva name, but it's kind of just like, it's got this bounce to it. And I'll end it the same way. Viva Finance, everybody. This is Get Wrecked, episode 7. I appreciate you guys, Jack, Hodges. This was awesome. Yeah. What y'all have going and what the future shows, it's going to be bright. And I really love everything that y'all got going on. So you guys share the show. Love y'all. We'll see y'all later. All right. Peace.
Awesome.
Boys.
That's great. Yeah. Thanks.
Yeah. 100%. Good work, y'all.